This video is created by Jagrat Creations. It is on departmental accounts. I wish to solve one sum here before you. Observe the sum on the screen. This is the sum which I wish to explain and solve here before you. EFG Limited has 3 department IJK. Following information is provided for the year ended on 31st of March 2017. IJK, opening stock, opening reserve for unrealized profit. So this opening stock includes some stock valued at a transfer price which has an element of profit and is unrealized, means not earned at all, because there is no change in the ownership of the goods, but there is a internal departmental transfer, and when the internal departmental transfers were made, profit was charged. So profit was charged by Department A to Department B, and the stock is left unsold in Department B at the end of the accounting period. There stands unrealized profit for which stock reserve gets created. So last year, at the end of the accounting period for the last year, the stock reserve was created 2,000, 3,000. This is the profit element in the opening stock. This stock gets sold during the year. So the unrealized profit, which is an element of opening stock, gets realized during the year, presuming that first in first out method is being followed normally. So opening stock is sold, so profit was unrealized, gets realized when the opening stock gets sold. This is the understanding. Material consumed, direct labor, closing stock, sales, area occupied in square meters, number of employees 30, 20, 10. Stocks of each department are valued at cost to the department concerned. Stocks are transferred to J. Stocks are transferred to J at cost plus 20%, and stocks of J are transferred to K at a gross profit of 20% on sales. Other common expenses, salaries and staff welfare 18,000 and 6,000. Prepare departmental trading and profit and loss account for the year ended on 31st of March 2017. Now I am required to prepare departmental trading and profit and loss account. So let us start with the preparation. So this is the layout for my trading and profit and loss account. This is the details of the sum given to you. First, opening stock I write on the debit side. Opening stock reserve that is not there. Material consumed 16,000 debited to trading account. Then direct labor debited to trading account of I. Then closing stock credited to trading account. Now area occupied cannot be written in trading account. Number of employees that is necessary for the purpose of apportionment of expenses. Now the stocks are transferred to J at cost plus 20%. So from I, goods are transferred to J. So what is the transfer price? Total cost 5,000 plus 16,000 plus 9,000 minus closing stock. So stock left in the department itself. So here you will get the cost of goods transferred, and the profit to be added therein is 20%. So 25,000 into 20%, 5,000 is the profit, that is 25,000 into 20%, 5,000 profit is added. So transfer price is 30,000. Debit the receiver, credit the giver. Department J is the receiver, Department I is the giver. So credit the giver and debit the receiver. So transfer, inter-departmental transfer 30,000. This is how it gets recorded. Now J, opening stock. Reserve for stock that I am going to consider later on while preparing general profit and loss account, because stock reserve is created not by individual department but by the management in its profit and loss account. So material consumed, direct labor, closing stock. This is the details for the purpose of apportionment of expenses. But let me find out the transfer price from Department J to K. So this is the total cost minus closing stock. So cost of goods transferred. The profit added at the time of transfer is 20% on sales. So 20% of 48,000, 9,600. 20% on sales. This is cost. So 48,000 into 20%, 9,600 is not the correct answer. Because here if I multiply 48,000 with 20%, then it is 20% on cost. And I am told that 20% on sales. So I am required to prepare a working note if the sales price is 100. Profit is 20. Cost is 80. If 80 is the cost, then 20 is the profit. How much for 48,000? If you work it out, that works out to be 12,000, not 9,600. That's an important point that student should understand. So here 20% on sales. So for that you are required to prepare the working note in this fashion, and this 12,000 is a profit load. So transfer value is 60,000. So 60,000 is transferred from J to K. K department is the receiver. Debit the receiver, credit the giver. So J's trading account is credited and K's account is to be debited. This is how it's debited. Now let me write down the details of K. Opening stock. This is stock reserve that I'm going to consider later on. Sales 5,000. Closing stock 5,000. Sales 80,000. These are the details for the purpose of allocation of expenses. So let me make the total. So this is the total material consumed for under the common ownership of all departments. Now sales 80,000. This is how total column 5 plus 25 plus 5, 30,000. Now all these expenses are required to be allocated. Salary and staff welfare expense 18,000. That will be distributed in the ratio of number of employees. So 30, 20 and 1. So 3:2:1 is the ratio in which 18,000 gets divided. So 18,000 into 3 by 6. 3:2:1. So 18,000 into 3 by 6, 9,000 for I. 18,000 into 2 by 6. That is for Department J, and for K 3,000. Let me write to the debit side of profit and loss account 9,000, 6,000, 3,000. Salaries and staff welfare expenses distributed in the proportion of number of employees. Now rent 6,000. Area occupied is given to you. 25:15:10. So 5:3:2. 6,000 distributed in the ratio 5:3:2. So 6,000 into 5 by 10, 6,000 into 3 by 10. For K 6,000 into 2 by 10. This rent gets debited to the debit side of profit and loss account. This is how it gets debited. Now this is how distribution of expenses has occurred. Now this is the total of credit side minus total of debit side. So I will get the net gross profit. So 35, 80, 85, 35, 80, 85 is recorded on the debit side. Now I will find out the gross profit. 35,000 minus 5,000 minus 16,000 minus 9,000. So the profit works out to be 5,000. 80,000 minus 30, 10, 20, 12,000, 6,000. This is how you can get the profit. This gross profit is transferred to the credit side of profit and loss account. Just observe. The gross profit is transferred to the credit side of profit and loss account. Now let me find out the net profit. So 12,000 minus 9 plus 3, 12,000. 12,000 minus 5,000. So there is a loss. Here 12,000 credit. 7,800. So here there is a profit. And here 6,000 minus 4,200. So in J and K department there is a profit. But in case of department I, there is a loss. So loss identified to be 7,000. Profit identified in case of J and K 4,200 and 1,800. This profit will be credited to the credit side of profit and loss account. So here I prepare profit and loss account. Net loss 7,000 debited. This stock reserve is an unrealized profit in the opening stock. We presume that the goods are sold by FIFO method. So opening stock was initially there under the ownership, was sold first. So unrealized profit in the opening stock gets realized by the end of the year, presuming that opening stock has been sold. So this unrealized profit in the opening stock gets credited to profit and loss account 5,000. Now, after identifying this, let me record the profit of J&K 6,000 to the credit side of profit and loss account. Now there is a closing stock in J&K department. So J&K department has a closing, J has a closing stock of 20,000, K has a closing stock of 5,000. In J closing stock, there is a profit element charged by I. In case of stock of K, there is a profit element charged by J and also profit element charged by I. So we are required to find out the profit unrealized in the closing stock of J and closing stock of K. There is no question for finding out the unrealized profit in case of I, because in department I, stocks are valued at the departmental cost, and in department I, there is no transfer from any other department that profit has occurred. So in case of I, 5,000 stock, we are not required to find out the unrealized profit. Now let us focus on that issue. Computation of unrealized profit in closing stock. There is no unrealized profit in the closing stock of department I, as the stocks are valued at the cost to the department, and there is no transfer to department I from any other department. So there is no unrealized profit in the closing stock of I rupees 5,000, so no need to calculate. Now next. Closing stock of department J 20,000. Now closing stock of department J. How much? 20,000. In that stock valuation, there is a profit load that was charged by department I. Now this closing stock 20,000 is a part of cost constitution of department J. In that this 30,000 item is an item which has a profit load, which has a profit element. So 30,000 which has a profit element. How much is the profit element in this 30,000? In this 30,000 the profit element is 5,000. So out of this total stock of 20,000, what is the segment of 30,000 embedded in this 20,000? That I will find out first of all. So 20,000 is the closing stock of department J. This 20,000 closing stock has a inclusion of this material consumed 20,000, direct labor 10,000, inter-departmental transfer 30,000. So 20 plus 10 plus 30 is 60,000 is the total cost, of which 20,000 is a constituent which has consumed proportionately material consumed, direct labor and inter-departmental transfer. I don't consider this opening stock because opening stock is sold and profit thereon is already being credited to this profit and loss account. So I ignore the element of opening stock in the closing stock because opening stock is presumed to have been sold. So it is not lying with the business, lying under the common ownership. So no need to consider for that. So I want to find out the profit element in this 20,000. Just observe how do I do. I'll prepare a working note. Following the FIFO method, it is understood that the opening stock of department J is sold during the year. Now, I want to find out the stock reserve. So cost element other than opening stock 20 plus 10 plus 30, 60. So 30,000 plus 30,000. So total 60,000. Out of this 60,000, the transferred proportion is 30,000. So one half is transferred proportion, which hold the element of profit. So out of 60,000, 30,000 is the transferred element, which holds a profit load. which has a conception of profit within it. So I want to find out the proportion that is relevant to the stock of 20,000. So if the total cost is 60,000, profit load item transferred value is 30,000. What is the profit load element in closing stock of 20,000? If you work out, the profit load element is 10,000. So this 10,000 is a part of this 30,000. Now in this 30,000, the profit element is 5,000. So what is the profit element in this 10,000? That is known as unrealized profit. So if the transferred value is 30,000, then profit element is 5,000. How much for 10,000? So this is the unrealized profit. So this unrealized profit is to be debited to the general profit and loss account, because this profit is going to be realized in the next year when this closing stock will become opening stock and will be sold in the next year. So this is how the stock reserve is to be created. So stock reserve for these 20,000 stock, this is the stock reserve required to be debited to profit and loss account. I can explain you the same calculation in a different way. So total cost 20 plus 10 plus 30, 60,000. In this 60,000, the profit element is 5,000. So in total cost 60,000, profit element is 5,000. What is the proportionate profit element in 20,000? Then also you will get the same answer, 1,667. But this is the right style to explain why it should be calculated in this fashion, that I am going to make clear when I will try to find out the unrealized profit in the stock of last department, that is K. So stock reserve for department J is being done away with. Now, following the FIFO method, it is understood that the stock of department K, opening stock of department K, is sold during the year. Now, closing stock of department K, 5,000, is a segment of 60,000. This 5,000 is a segment of 60,000. That is transfer from J. So in K there is a opening stock 90,000. Transfer 60,000. So 60,000, the opening stock is already sold. So out of this 60,000, 5,000 stock is left. So closing stock of department K, 5,000, is a segment of 6,000, 60,000. This 60,000, there is no material consumed and direct labor in case of K. Remember it. 60,000, that is transfer from J. Now when it was transferred at 60,000 to K, from J to K transfer was made 60,000. At that time there was a profit load of 12,000. So how much is the profit load? For 60,000 transfer value, profit load is 12,000. So how much for 5,000? That I would like to work out. So closing stock of K is 5,000. If transferred value from J to K is 60,000, profit charge was 12,000. What is the proportionate amount for this 5,000? So that is the profit element included by J while sending goods to K. So 1,000. So closing stock 5,000, profit element of J charged in it is 1,000. So this is a cost for department J, and cost of department J hold the element of profit of department I. So the closing stock of 5,000 of department K has got two profit loads, one charged by J and one charged by I. Because I to J there was a profit load and J to K there was a profit load. So from come back K to J, there is a profit load of J is unloaded, but you are required to unload the profit load charged by department A when the goods were transferred from I to J. So now for this 4,000, I want to find out the profit element. So for this 4,000, the profit element that I want to find out, that was charged by I when the goods were transferred to J. So this procedure will be repeated here. So if 60,000 is the transfer value, 30,000 is the profit. This arrow is wrong. 60 is to 30. From here you have to take, not from here. 60 is to 30. How much for 4,000? So profit load element is 2,000. And 30 is to 5. Same way, same analogy. This working was done to find out the unrealized profit in the stock of J. The same procedure you are required to repeat to find out the profit element in the stock of K that was charged by I, department I. So 30,000 into 5,000, how much for 2,000? So this is the profit. 2,000 into 5,000 divided by 30,000, 33. 333. So 1,000 is the profit element in the stock of K that was charged by J. 330 is the profit element in the stock of K charged by department I. Because I transferred at a profit to J. J transferred at a profit to K. So stock in K holds the profit not only of J but also of I. And to find out the profit element of I, this procedure is followed. The same procedure repeated for the purpose of finding out the profit element of I in the closing stock of K. So this is the stock reserve created debited. So profit and loss account debit to stock reserve account. Now you can find out the difference, 11,000 minus. So this is the profit transfer to profit and loss. This is the profit realized. Now I have tried to explain you this sum. In this sum there are two limitations. I have not recorded the title trading account that I should have recorded. Similarly, I have not recorded the title of profit and loss account. Notice that. But in real speaking, not that I have forgotten, but it was not possible me to write down the title of profit and loss account in this on the screen, because look at the content that I have brought in on the screen. So I deliberately avoided the writing of title of trading account in this trading account that has been prepared. So please tolerate that. That is being done because of certain limitations of the screen. But you being mature students, you can understand it very well. I have tried to explain you this sum. I feel that you follow all these things. Thanks to all.